Let's take a look at the markets from the perspective of the traders on the trading floor in Chicago. I want to bring in Scott Gecas. He's with Walsh Trading. He's there in Chicago right now. The corn market kind of quiet today. Soybeans just can't seem to really get their feet back under them. Now, why is that after we had that export sale announcement?
Well, we have a lot of different things going in with all these grain markets. You have the trade war talks, you have positive rhetoric, then you have negative rhetoric. I mean, the soap opera obviously is continuing on. You know, especially when Trump is saying that he's in no rush to have a deal anytime before the election. So it's definitely a strategic play going into his campaign, which everybody already knows that. But as far as the current market right now, beans are a little bit lower just due to we have a little bit cooler weather in the States. Brazil has a little bit drier weather. China is going to start importing agricultural products from Brazil a little bit more. So they're still shopping around. They started shopping around in Argentina, now Brazil. So they're definitely playing both sides of the coin, whether or not they're going to continue to buy U.S. beans. They have been continuing to buy U.S. beans as a sign of good faith. Whether or not that is going to continue has yet to be seen. So the biggest concern that we're looking at in the corn, we had bearish news on Monday, and it didn't really fall apart. So it's holding steady. And then the biggest concerns right now are dense stage as well as quality. And the dense stage right now is the lowest it's been since 1992. So we're going to keep an eye on that and see if that's going to affect anything moving forward. See if this weather is really going to shape up and see if we can get this harvest done.
All right, we'll come back in a moment and take a look at our livestock trade as well. We're talking with Scott Gecas right now, direct from Chicago, and we'll be back right after this. All right, we are talking with Scott Gecas of Walsh Trading in Chicago. I noticed where we have the Dow firming up about 90 points, the crude oil kind of taking a hit today, and then the dollar value. If we can take a look at what the dollar index value is doing right now, we have December futures 590 points higher at 98.500. Scott, when you have a rally in the dollar value like that, sometimes that can be detrimental to ag exports coming out of the U.S. here. Are the traders talking about that today?
Well, the strong dollar has been a story for the last 18 to 24 months. So with that being said, it's kind of a risk on, risk off. It really depends on how it's being viewed. Again, with all the trade war talks and everything driven by headlines, it really depends on the eye of the beholder. So one day it could be detrimental. The next day, no one's even paying attention to it, like today. So it's really a back and forth thing. It just really depends on public perception of what is the dollar actually doing to the outside markets at that particular time.
On the livestock trade, when it comes to the cash cattle markets, nothing shook loose yesterday, but we did hear asking prices around 104 to 105 yesterday. The futures are just bobbing around in the water here, not doing anything today. We have the nearbys a little bit firmer now on live cattle. December up 23 at 107.65. You have the April of next year down a dime right now. And on the feeder cattle market, we currently have the October contract 20 lower at 141.45. Interesting, where it's just the inverse of what we had on the live cattle trade, where here you have the strength in the deferred months and weakness on the nearbys, so kind of a reversal there. If you look at the lean hog market, we currently have the lean hogs on December now up 73 cents at 69.83, in February 67 higher at 76.60, but we're off our earlier highs by about 60 cents on that December contract. Do you see much driving the markets here? I know we've had a lot of talk about technical formations on the cattle side, but what about on the hog side?
Well, on the hog side, it's a completely different. With the hog market, with the African swine fevers continuing to spread, anything that is driven by headlines, you could pretty much take all the technicals and throw them out the window. So it's all driven by the headlines. Right now, the biggest story that we're looking at in lean hogs is the December premium over cash. 5-year average is about 700 points. Right now, it's 2 times the value, about a little over 1,400 points. So that's definitely a concern. But that also is affecting the deferred months. You go out to the deferred months, April, February. You're looking at a little bit of upside calls being active. You're seeing a little bit more optimistic to the upside. Okay. But that does make sense, because if we get anything done with this trade war, even a slight deal, you should see the imports explode to the upside, and that's what all the traders are hopeful for.
Fingers crossed. All right. Thanks, Scott, for talking with us. Scott Gecas of Walsh Trading right there in Chicago.